On 20th of January 2026, S&P 500 lost more than 2% within a day after a heavy gap down open. And this was because the president has issued a threat to the European nations of 200% tariffs. However, on the next day, on 21st of January, he said that there will not be any such tariffs. Which is why on 21st of January, the market retraced and tried to recover the losses that were seen on Monday. However, this fall is not a surprise at all. Why? Because we knew that the Dow Jones is heading to the 50,000 psychological mark and the S&P 500 is heading to the 7,000 psychological mark. This means that there will be repeated failures before the Dow Jones can hit the 50,000 and the S&P 500 can hit the 7,000. And now there is a problem to the market because of the Dow Jones, because Dow Jones seems to be in the consolidation. And this is the chart of the Dow Jones and you can see the consolidation in the Dow Jones. So if Dow Jones is in the consolidation, this means that S&P 500 won't be able to hit the 7,000. Unless Dow Jones moves up and gives some breather to the S&P 500. And if you want to see how the Dow Jones and the S&P 500 work in a sync, then let me show you. So Monday there was very heavy fall, 2%. S&P 500 intraday came into the condition to recover and to trade bullish. But it failed to trade bullish. Why? Because of the Dow Jones. And why because of the Dow Jones? Because the Dow Jones was trading in the open equal to high condition on that day. The S&P 500 was not in that condition. And the Dow Jones was trading in that condition for almost for the entire day. This is why it was clear that S&P 500 will remain bearish for the entire day. No matter what, only because of the Dow Jones, it won't be able to move up to recover and to trade bullish. And then after the first update, this was the midday update. And again, I mentioned that because the Dow Jones is still trading in the open equal to high condition, and this is not allowing the market, the S&P 500 and the Nasdaq to trade and to remain bullish. This means that now chances are getting lesser if the Dow Jones will be able to come out of the open equal to high condition at all. This means that the bullish side in the S&P 500 will remain limited and restricted to the 687X only, irrespective of anything. The next day we have seen just the opposite movement because the next day S&P 500 came into the condition wherein it could have lost more and heavily. But Dow Jones came to rescue and helped the S&P 500 to hold and sustain and not to lose heavily. And you can see here in the midday update that because the Dow Jones was holding in the open equal to low condition, this means entire US stock market will hold and will sustain. And the bearish side in the S&P 500 will be limited to the 6, 7, 8x or 9x maximum. That's it. So now that I have shown you this, the sync in the S&P 500 and the Dow Jones, in between the S&P 500 and the Dow Jones, that is why I am saying a probable consolidation in the Dow Jones will not allow the S&P 500 to try, test and hit and breach the 7,000. It is now very much complicated. It was not until last week, but it is now. Anyways, whatever is going to happen in the S&P 500, Dow Jones, Nasdaq and in a manner to the entire US stock market, I will discuss all of that in detail in this S&P 500 weekly technical analysis, which is for the week of January 26th, means from January 26th, which is Monday, through January 30th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. In the first part, I will do the technical analysis. I will show you through the technicals how much percentage wise it is bullish, bearish on the daily and the weekly chart. I will cover daily and the weekly chart in the technical part. Second part is the probable movement. In the probable movement section, I will tell you that how we are expecting the market to move in the next week. What will be the bullish condition? What will be the bearish condition? Bullish level, bearish level, zones, etc. So first I will start with the technical part. But guys, before I do that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones in a manner to the entire market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, now I'm going to discuss the first part, and here I will discuss the weekly and the daily chart. Okay. First, I will discuss the weekly chart, the technicals, and then the daily chart, the technicals. So this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. Now, if you look into this, the weekly candle, what we can see here is that there is no open equal to low, no open equal to high condition. Fine. Secondly, there was very heavy intra-week bullish reversal, and in a manner that the closing price is higher than the open price and is also above the low or the open prices of the previous candles. Okay, what does this indicate? This indicates bullishness. Okay, it's a good bullish candle. Okay, secondly, closing is above the low of the previous candles 1 and 2. These are the candles. It indicates bullishness. Okay, and because of this heavy intra-week bullish reversal, it also indicates a gap up open on Monday. Okay, or irrespective of anything, there will be an initial or intra day bullish movement on Monday, and also this candle will support bullishness in the entire week, because we are talking about the weekly chart, right? So this will support the bullishness for the entire week. This is the weekly candle of the S&P 500. So overall bullishness. Okay, now this is the weekly chart of the Dow Jones. Here on the weekly chart of the Dow Jones, this is not good. Okay, why? Because if you see, it is not in a proper sandwich pattern. Okay, sandwich pattern is like when there are these two candles, okay, good heavy candles, okay, of the same color, and then there comes a third candle in between these two of the different color. Okay, so what happens in that case, the color of these two candles, okay, it is followed on the fourth candle, right? So this is what happens, but in this case, this is there is no sandwich pattern. So what does this indicate? So this candle, okay, it's simply a limited bullish candle, okay, and a kind of spindle. Spindle means that it indicates a reversal in the market. It indicates what? It indicates a reversal in the market. There was a bullish trend, now it indicates a reversal in the market, right? This means that if the S&P 500, so this is the Dow Jones. This means that if the Dow Jones fails to sustain, okay, on Monday, okay, most likely on Monday, in that case, the entire week we can see the bearishness. Okay, but that bearishness through the Dow Jones will be countered by the bullishness of the S&P 500. Okay, so fall will be handled. There will be fall, but the fall will be handled. Okay, bullish side, there will be the struggle. So this candle is indicating neutral movement, neutral sentiments, whatever will happen through the daily chart, okay, the open, etc., whatever will happen in the S&P 500 will be replicated in the Dow Jones. Okay, so this is one part, the candles. Now let's analyze the technical indicators, and the technical indicators will tell us, okay, what we can expect on Monday, okay, and for the entire week bullishness or the bearishness. In terms of the technicals, S&P 500 is bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the weekly chart. Okay, and well, now guys, there is a problem. The MACD of the S&P 500 is bearish. Okay, the stochastic RSI of the S&P 500 is also marginally bearish. Okay, no saturation, no oversold, overbought, etc. What does that mean? This means that the S&P 500 is 60% bullish. It is still bullish. Okay, no doubt about that. Okay, long-term trend is still bullish, but now there is a weakness. There is a weakness in this, the long-term trend. Why? Because the MACD is bearish and the stochastic RSI is bearish, and now there is the bearish momentum, okay, through this, the weekly chart. Weekly chart is the heavy chart. Okay, so only 60% bullish. Let's see, okay, what is happening in the Dow Jones. Well, Dow Jones, the moving averages are still holding. Okay, so Dow Jones is bullish through the Bollinger Bands, through the Ichimoku cloud, through the moving averages on the weekly chart, and the Dow Jones is okay, again, okay, no. So there is a good thing is that the MACD on the weekly chart of the Dow Jones is still bullish. Okay, stochastic RSI is bearish, that's the problem, but otherwise it is okay, it is fine. So Dow Jones is not in that kind of problem, okay, that we have seen in the S&P 500. Dow Jones is 80% bullish on the weekly chart. The long-term trend in the Dow Jones is still bullish, or is still good bullish. Good bullish. This means whatever weakness, whatever fall that will be there in the market, this fall will be limited, okay, and recoverable. Why? Because it is 80% bullish and the S&P 500 is 60% bullish. So weakness will be there, fall will be there, but that fall will be limited and will be recoverable, just like what we have seen in the last week. And in the previous S&P 500 weekly technical analysis also, I mentioned the same. Okay, the conditions were there that whatever fall will be there, this fall will be limited and will be recoverable. Okay, and we have seen that intra week there was heavy fall and then that fall was recovered. So in this manner, the market, the S&P 500, Dow Jones, Nasdaq, okay, these indices are bullish in the long term. Okay, there is some weakness in the short term. This weakness will trigger some fall. Okay, that fall will be limited, will be handled by the levels and the zones and the moving averages, and will be recoverable. Okay, the worst thing is in the Nasdaq. Okay, Nasdaq is actually there is heavy bearish momentum, okay, in the Nasdaq. Okay, however, S&P 500 and Nasdaq for now are safe because of the Dow Jones, because Dow Jones is 80% bullish on the weekly chart. MACD of the Dow Jones is still bullish, and that will support the bullish momentum, because Dow Jones will give limited fall. Okay, so the same limited fall will be seen in the Nasdaq or S&P 500. Right. So overall intra week we will see like 1% fall was there, means from through these weekly candle 1% fall was there, or 1.5% fall was there, because the fall will be recovered. Okay, if not 100%, then 50, 60, 70, 80% it will be recovered. Why? Because of the Dow Jones. Okay, now how much it will be recovered, that will be clear through the daily chart. So let's move on to the daily chart. So guys, this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay. Now, so before I discuss this, the daily candle, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, if you notice the last daily candle of the S&P 500, it is barely bullish. Okay, a very simple, very limited bullish candle. Okay, so no gap up. Okay, the only good thing is that because it's a bullish candle, okay, and also the closing of this candle is above the closing of the previous candle, and also the closing of the candle is above the moving averages. Okay, this indicates an initial or intraday bullish movement on Monday. Okay, no gap up, nothing, just an initial or intraday bullish movement on Monday. Okay, now let's analyze the last candle of the daily candle of the Dow Jones. Okay, this is a bearish candle, but again the same condition here. So no, not the same, the only condition that this candle, the closing of the candle is above the cluster of the moving averages. Okay, so this candle does not indicate a gap up or this the gap down open. Okay, and not even an initial or intraday bullish movement. This candle simply indicates an initial or intraday bearish movement on Monday. However, this bearishness will be limited. Why it will be limited? Because the closing of the candle was above the cluster of the moving averages. So in a manner we can say like neutral sentiments. Okay, so what does all of this indicates? All of this indicates the daily chart, the weekly chart, okay, the candles. I'm talking about the candles. Okay, all of this indicates that on Monday, irrespective of anything, there will be an initial or intraday bullish movement. There may or may not be seen a gap up open, okay, but an initial or intraday bullishness, the bullish support on Monday will be there, okay, to the entire market, S&P 500, Dow Jones, and the Nasdaq. Okay, it will be there, the bullish support will be there. Okay, and remember what I have shown you on the weekly chart. I'm shown you on the weekly chart that the Dow Jones is 80% bullish. Okay, so this will help the S&P 500 to sustain. Now let's talk about the technicals on the daily chart of the S&P 500. So S&P 500 is bullish through the Bollinger Bands, through the Ichimoku cloud, through the moving averages on the daily chart, and the S&P 500 is heavily bearish through the MACD on the daily chart, but is bullish through the stochastic RSI on the daily chart. Neither oversold or overbought, okay, or saturation. So this means that the S&P 500 on the daily chart is 80% bullish. 80%. Okay, on the weekly chart it was 60% bullish. Okay, so overall the bullishness is there. Market is still holding bullish. It is still sustaining bullish. Okay, let's get the confirmation through the Dow Jones. Dow Jones is also bullish through the moving averages, Ichimoku cloud, and the Bollinger Bands on the daily chart. And the Dow Jones is okay, the same story. It is bearish through the MACD on the daily chart, and it is bullish through the stochastic RSI on the daily chart. Dow Jones, okay, Dow Jones is neither overbought nor saturated. Okay, so Dow Jones is also 80% bullish on the daily chart. Right now, there is one more thing. Okay, I forgot to tell you that on Monday, when the S&P 500, Dow Jones came down and were under very heavy pressure. Okay, so what we have seen is that the Dow Jones saturated on on Tuesday. Okay, that was the first working day. The Dow Jones hit the saturation on Tuesday. That is why on Tuesday itself, and then I repeated in the pre-market analysis and in the first update on Wednesday, that because of this heavy saturation, we are expecting a bullish movement in the Dow Jones. In the Dow Jones on Wednesday, and if for any reason, if it trades red, if the Dow Jones trades red, okay, on Tuesday, sorry, this was the Dow Jones. Okay, if the Dow Jones trades red on Tuesday, then 100% there will be very heavy bullish movement on on this was Wednesday. Yes, then 100% there will be very heavy bullish movement on Thursday. Why? Because the Dow Jones hit the saturation on Tuesday. Okay, and historically that saturation was there. This means that on Wednesday, irrespective of anything, it is in a strong condition to move up to bullish movement. Okay, you can read my pre-market analysis on this day. So what we have seen here is that on the daily chart, the S&P 500 and the Dow Jones both are 80% bullish. Okay, both are 80% bullish. On the weekly chart, the S&P 500 is 60% bullish, but the Dow Jones is 80% bullish. This means that so far there is no change in the long-term trend. The long-term trend is still bullish, and bullish. Okay, now does that mean that the S&P 500 will be able to hit the 7,000? No. Why? Because of the Dow Jones. Because Dow Jones is most likely, highly likely, it is already in the consolidation. Okay, and as I have shown you the impact of the movement, okay, in the Dow Jones and the synchronization, okay, the sync in the S&P 500, in between the S&P 500 and the Dow Jones. Okay, so just like we can see here, on Tuesday the S&P 500 failed to move up. Why? Because Dow Jones did not allow it to move up. Okay, then next day S&P 500 was supposed to lose heavily, but Dow Jones was in a strong bullish condition, holding. That is why the fall was limited. And that sync is not for the happening for the first time. Okay, the stock market is designed in this manner. Anyways, whatever is going to happen in the next week in the S&P 500, Dow Jones, Nasdaq, okay, I will keep you posted through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. And guys, it's not just about these daily precise updates, pre-market analysis, first update, second update, midday update, final update, etc. But I also give the premium opportunities, in the premium stocks 5050 to 8080, 50 to 80 every month to my Patreon community members. Okay, these are premium opportunities, and that's not all. Because I also give the S&P 500 mid-week update. It is generally given every Wednesday or mid of the week. Okay, this is a video technical analysis. In this video technical analysis, I discuss in detail the levels, numbers, movement, okay, precisely. So guys, if you also want to get these daily precise updates and the stock market opportunities and the mid-week update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button which says membership options. And when you click on this button which says membership options, then you will see that there are these three levels: level 1, level 2 and level 3. The level 1 and level 2 are same. The only difference is the geographical location. Otherwise it's same. Okay. Level 3 is the premium level, because whatever you are going to get here in the level 1 and level 2, okay, by default you will get here. Other than that, you will get the premium opportunities 50 to 80 every month in the stocks, ETFs, etc. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire market every day from Monday through Friday, as well as the stock market opportunities and the midweek update video technical analysis. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the second part of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. The probable movement of the S&P 500, Dow Jones, and in a manner to the entire market, okay, for the next week. Next week means the week of January 26th, means from January 26th, which is Monday, to January 30th, that will be Friday. Now, next week is going to be very important, very crucial for the entire US stock market. Not just for the US stock market, but for the global stock markets. Okay, how and why? Okay, first of all, on Wednesday, okay, on 28th of January 2026, the FOMC event, the press conference and the decision on the interest rates. Okay, this is the biggest event for the next week. Now, this will make the markets heavily volatile. The stock markets, worldwide stock markets, heavily volatile. Now, in order to add more volatility, on Wednesday after market hours, Microsoft, Meta and Tesla will release the earnings. Okay, the earnings of the impact of these stocks will be felt on Thursday morning. Okay, Thursday will be heavily volatile. So the volatility we will start to see in the market from Monday itself, but it will increase heavily on Wednesday than on Thursday. Now, the volatility will not stop on Thursday, because on Thursday after market hours, Apple will release the earnings. Its impact will be felt or will be seen on the stock market on Friday. Okay, in this manner, the next week, the entire week will be heavily volatile. So this is good and also this is bad for the stock market. Why and how? For that, you need to understand, this is the Dow Jones. If you see the pattern in the Dow Jones, okay, Dow Jones, okay, it looks in the consolidation, and it is actually in the consolidation. Though it broke the consolidation, there was a condition on Tuesday 20th of January 2026, okay, Tuesday, that it has given a bearish breakout. Okay, but then next day, it managed to save itself because of the saturation that I mentioned, okay, to my Patreon community members on these 2 days. Okay, then came the comments of the president, so it managed to save itself and re-entered into the consolidation zone. And when it re-entered into the consolidation zone, then again we have seen this movement. Okay, so it is oscillating in the consolidation, and this is actually what the consolidation is. Consolidation means oscillation in between two levels, okay, or in between two zones. So it is doing that. Okay, now if there would have been a bearish breakout, then perfect. Okay, this would have triggered heavy fall, okay, at least 5 to 6% fall in 2 days, 2 to 3 days. Okay, but the bearish breakout cancelled. Now next week, okay, Wednesday, the FOMC event. So on the day of this, the FOMC event, if the Dow Jones manages to breach and to close and to give a bullish breakout, then what will happen? On that day, it will hit the 50,000 psychological mark. Why? Because the all-time high of the Dow Jones is $49,633 0.35. It is very, very close. It is just like 1%, less than 1%, 0.8% away from 50,000. Okay, once the Dow Jones hits the 50,000, S&P 500 will be in a strong condition either to hit the 7,000, okay, or to reach near to the 7,000, and then the next day to hit the 7,000. Okay, so remember this is what I have repeatedly mentioned to my Patreon community members also. 50,000 in the S&P in the Dow Jones and 7,000 in the S&P 500. This will happen either on the same day, okay, or just plus minus one day. This will happen in this manner. Okay, most likely as per the conditions, okay, as as are seen in the market as of now. S&P 500 is already trading in the 6,900 range. Okay, and S&P 500 is like what? It is like 1.2% or 1.1% away from the 7,000. Okay, it is in that condition, I think, almost for 2 months or 2 or 3 months. Okay, but it has again repeatedly failed. Okay, because it was supposed to fail. So this is nothing new. It was supposed to fail and it failed. This means that only a bullish breakout condition can help the Dow Jones and the S&P 500 to achieve these respective levels of the 50,000 and the 7,000. Now there are some conditions, okay, or the scenarios. Okay, what if the S&P 500 or the Dow Jones, okay, in the S&P 500 there are not good chances that it will hit the 7,000, but in the Dow Jones there are. What if the Dow Jones hits the 50,000 before Wednesday, before the FOMC event? Okay, in that case also this will not be confirmed if the Dow Jones will be able to sustain at or above the 50,000, and at the same time there will not be any kind of confirmation that if the S&P 500 will hit the 7,000 or not. Okay, why? Because this is happening before Wednesday, before the FOMC event. Now only and only when the event is there, the FOMC event is there, and based on the outcome of the event, Dow Jones is hitting the 50,000 and the S&P 500 is hitting the 7,000. This hit, breach, and the new all-time high in these the psychological, okay, these are ranges will be accepted. Okay, accepted means then there will not be any condition, okay, of a heavy fall or so. Whatever fall then will be there, that fall will be limited. Okay, but if it happens before, then no, then there is no sustainability and no guarantee that if the other index will be able to hit the psychological mark. Okay, so what does this mean? This means that if the S&P 500, okay, or the Dow Jones, or both, or if both of these, okay, if they get the bullish breakout condition, okay, or this the bullish breakout on Wednesday, then this means that indices are going to enter or have already entered into the 50,000 and in the 7,000 ranges. Okay, secondly, because it is a bullish breakout condition in the Dow Jones, okay, this means that now the Dow Jones is allowed to move, okay, around, you can say like 4%, 3 to 4% minimum in the bull side. Okay, although it will remain in the obligation to come down and to test the previous all-time high of 49,633.65 formed on 12th of January 2026. Okay, but it can do so either on the next day or after 3-4 days or 1 week or so. Okay, means first it has covered the it has given the 3 to 4% bullish movement, and then it is coming down, okay, to test in that condition. And when, okay, and this the bullish breakout in the Dow Jones will help the S&P 500, will help the S&P 500 and the Nasdaq to move up higher, and the S&P 500 will then be in a condition to test the 7,100. However, there is a problem in the S&P 500 when it enters into the 7,000 range. Okay, so although there will be a bullish breakout in the Dow Jones, it will enter into the 50,000. S&P 500 will be allowed to enter into the 7,000. Okay, then in the 7,000, okay, somewhere in between 7,100 and 7,000, okay, there is my calculated level, and then another level, okay, quite near. These two levels are creating very heavy resistance zone. Okay, this resistance zone is demanding a fall, a good fall, at least like this kind of fall, before it is allowed to move up. Okay, this means that, okay, and this is exactly what I mentioned here on 9th of January 2026, then on 12th of January 2026, then on 13th of January. Okay, what did I mention here? 698x. So if you have subscribed to my YouTube channel, okay, then in last to last this the S&P 500 weekly technical analysis, I mentioned 698x. Okay, is there is a small zone in the 698x. Okay, this small zone demands the fall in the S&P 500. Okay, so before S&P 500 hits the 7,000, it will enter into the 698x and then it will fail in the 698x. It failed in the 698x and lost the 6,900 entirely, came and entered into the 6,800. 6,885 was the low. Okay, so similar kind of situation is there. Okay, in this the range. Now to add some more problem here. Okay, there is not just one range, there are actually two zones. Okay, that are there in between the 7,000 and 7,100. Two zones. This means that even if for any reason like heavy bullish breakout or comments from the president or so, it managed to move up and breaches one zone, move to the second one, okay, it will fail. Either it will fail at the first, okay, if not then 100% it will fail at the second. When it fails, it will come down and then it will re-enter into the 6,900. Okay, will make this the heavy support zone. Okay, in the 6,900, where it will make this the heavy support. Okay, in the 695x, if not then in the 691x. Okay, it will test, retest, sustain, and then it will move up again. Okay, this will happen in the bull side if only and only if the FOMC event goes in favor of the stock market. What if the FOMC event okay, it doesn't help the market, it doesn't help the Dow Jones to enter into or to get the bullish breakout? Then what will happen? There will be two scenarios. Either the entire market will remain range bound, the Dow Jones will remain in the consolidation zone, okay, or it will give the bearish breakout. Bearish breakout for now is not is not that much of chances. Why? We can see here that on Tuesday 20th of January there was clear bearish breakout, okay, and it was supposed to trigger more fall, but next day it managed to sustain, managed to recover, re-entered into the consolidation zone. Okay, that is why even if there comes heavy fall on Wednesday, okay, because of the FOMC, and there comes a condition of the bearish breakout, okay, then also on Wednesday after market hours, Microsoft, Meta, and Tesla, these three, the big ones, the primes of the S&P 500 and Nasdaq, okay, are in a condition like if these three or any of these two gives better or post better than expected earnings. Remember, this is the earning season. Okay, so an earning season has the potential or has the power to trigger heavy bullish or the heavy bearish movement. Generally it is bullish. Okay, so if all of these three or any of these two triggers heavy bullish movement, okay, then the bearish breakout condition will fail. Again it will fail. There will be re-entry to the consolidation, not in the S&P 500. Consolidation is where? Consolidation is in the Dow Jones. Remember, consolidation is not in the Nasdaq or not in the S&P 500. Consolidation is in the Dow Jones. Okay, so it will help the entire market, the Dow Jones, to recover and to re-enter into the consolidation. Then we will have to wait for Thursday after market hours when Apple will post the earnings. Okay, and if Apple supports, then again it will remain in the consolidation. If the Dow Jones fails to come out of the consolidation by next Friday is January 30th. Okay, so 30th of January 2026 Friday, if Dow Jones fails to come out of the consolidation, then we will expect market to remain like this, and in that case chances of 7,000 in the S&P 500 and 50,000 in the Dow Jones will be very limited, very thin, and it might not happen now. First there will be the fall, a short-term bearish cycle, then recovery, then only the 7,000 and the 50,000. Okay, now to make the matter worse, okay, now comes the gold. Okay, gold. So how gold is making the matter worse? Gold, it was I think on 1st of January, okay, or in the last week of December, gold was trading around 4,200. Okay, now gold is very near to 5,000. Now, how this 5,000 is important in the gold and how it is impacting the movement in the stock market. So on Friday, okay, this was the pre-market analysis to my Patreon community members, and here I mentioned that because the gold is very near to 5,000 and is indicating a fear in the market, and if gold crosses and moves beyond and sustains in the 5,000, then 50,000 in the Dow Jones and the 7,000 in the S&P 500 will be delayed or might not happen at all. Okay, so on Friday I mentioned that my calculations are indicating that gold can breach and move into 5,000 range because it's in a bullish breakout. Okay, and whenever there is a bullish breakout or the bearish breakout, then the movement, bullish or bearish movement, okay, it cannot be stopped, okay, through the regular technicals or so. So there is a natural fear as gold has moved too fast towards the 5,000. Okay, so there was just hesitation, okay, that it is, but now at the time of closing on Friday, I think gold has reached to the 4,985 or something. It is like $20, okay, $20 to $25 away from hitting the 5,000. Okay, so what we know is that irrespective of anything, once the 5,000 is breached, then it will be a very, very different story. Okay, there are 3 heavy levels in the gold. Okay, I've repeatedly mentioned these levels in the opportunities also. Okay, 4,885, that was there, the gold has recovered, sustained. 4,999, okay, just $1 less than 5,000. Okay, then 5,160, these are the 3 levels in the gold. Okay, if gold enters into the 5,000, sustains in the 5,000, then only when it reaches around 5,160, okay, or 5,170, then only it will stop. Then only we will see some fall, 2, 3 or 4% fall or 5% fall in gold. Okay, otherwise not. So this heavy bullish push, bullish breakout in gold, heavy bullishness in gold, it is putting pressure on the market, pressure on the equity market. Why? Because people are pulling out, they are pulling out the money from the equity market. Okay, not all of the money, but some of their money they are pulling out of the equity market and putting it into the gold. Okay, because there is a fear of the economic meltdown. Okay, what is economic meltdown? Economic meltdown is the recession. So there are multiple reasons, right? First one is the consolidation in the Dow Jones. Second is the 50,000 in the Dow Jones. Third, 7,000 in the S&P 500, and then comes the gold. Okay, so these all are the, okay, and the biggest of these the fears. Okay, biggest of the fear, these the fears is what we know. Okay, is the actions, okay, strategies, plan, execution, and the comments of the president himself. And as of now, it's been only 1 year in the office. Okay, 3 years to go. So we will expect more of, this kind of movement. But you need not to worry about this, because whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates, which I give to my Patreon community members every day from Monday through Friday. Okay. And if you also want to get these updates, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now comes the bearish side. What will happen in the bearish side? Before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, what happens in the bearish side? What will happen in the bearish side if there comes the situation like on Wednesday, there comes the bearish breakout condition? Then what will happen in that case? Okay, well, in that case, the 50,000 will not happen. 7,000 will not happen. Okay, Dow Jones will come out of the saturation. Okay, now in order to confirm, not saturation, consolidation. In order to get a confirmation that it is really out of the consolidation, Dow Jones must close below, you can say like 49,000. Okay, 2 consecutive closings below 49,000 mark. Okay, this will be enough to trigger the bearish breakout, but this must happen Wednesday or Wednesday onwards, not before. If this happens on Monday and Tuesday, no, then this will not be considered. It must happen either on Wednesday or after Wednesday. Two consecutive closing, daily closings below 49,000, then this will be in a condition to give the bearish breakout. Okay. Now, whenever you see that the bearish breakout is there, then what you will notice is that there will be a gap down open. Okay, a good gap down open will be there in the market. Okay, and most likely this will be in the open equal to high condition. Okay, so this will then further confirm that yes, there is a 100% there is a bearish breakout. Okay, when this bearish breakout happen, then Dow Jones will come down heavily. Okay, but the problem is that the S&P 500, why? Okay, see, on the weekly chart I have shown you that the S&P 500 is bearish through the MACD and the S&P 500 is bearish through the stochastic RSI, right? So there is bearish momentum, bearish pressure. When the S&P 500 comes down, okay, 685x is the only known level. Okay, so at or around 685x, S&P 500 has the reason and the potential to hold. Okay, because this is a calculated level and has held the S&P 500 earlier a lot of times. Okay, once this is gone, once S&P 500 loses the 685x, okay, in that case there will not be any other option but it will have to enter into the 6,700. Once it enters into the 6,700, okay, then it will be looking for the 672x. Although there are levels in between, there are multiple levels in between these two, and there are conditions, okay, for a fall from 685x to 682x, but these are two very heavy levels. Okay, and also zones are there, so that I will mention, okay, on the daily basis in these updates, okay, as and when, okay, it is needed. But as of now, okay, you just need to know that 685x, okay, then comes the 682x. However, there is one more thing. If the S&P 500 sustains within the 6,700 range, okay, means there is one closing, then there comes two closings, okay, two or more closings. So what happened is that on 20th of January, the S&P 500 closed in the 6,700 range at 6,796. So this was perfect because there was also a bearish breakout in the Dow Jones, but the next day everything changed. Okay, and that changed because of the saturation in the Dow Jones, and then further the comments of the president, okay, on the tariffs has helped the entire market to sustain and to recover. But when there comes two or more closings below 6,800 in the 6,700 range, then we should be ready for the 6,600 range and also the 6,500. This means that losing 6,800 is going to create a big problem for the S&P 500. Okay, and this will happen if the Dow Jones comes into the bearish breakout condition, because Dow Jones itself is going to lose. Dow Jones will enter into the 47,000 range. It will lose more than 3 to 4%. Okay, S&P 500 will be forced to lose. If Dow Jones loses 3%, then S&P 500 will have to lose 4 or more percent. So when it loses 4 or more percent or around 5%, okay, then it is already in the 6,600 or the 6,500 range. Okay, when it comes down that much, okay, in that case, the 7,000 is not going to happen. The 50,000 in the Dow Jones is not going to happen. It may happen in the near future after 2 months, 1 month, 3 months, 6 months. Okay, but as of now, this will not happen. As of now, the entire market will enter into the short-term bearish cycle. Okay, this is what is going to happen in the near term. This means that sustaining within the 6,900, okay, it is a necessity. Sustaining within the 6,900 range, okay, it is a compulsion, it is a necessity, because only and only if or as long as the S&P 500 is holding and sustaining within the 6,900, it will remain in a condition to try for the 7,000. If it loses the 6,900, then it must sustain within the 6,800, okay, and then should recover the 6,900. And as long as the S&P 500 is holding and sustaining within the 6,800, it will again and again try for the 6,900. Okay, and then 6,900 means the 7,000 is open. Okay, problem will start when it loses the 6,800 and it starts to trade below 6,800, and in that case the recovery will not be possible. Whatever the recovery will be there, that recovery will be limited, and that is actually the problem. okay, then it will enter into the short term bearish cycle. Short term bearish cycle means 6,500, 6,600 minimum, and then 6,500. That is the short term bearish cycle. Okay, whether there will be an opportunity to buy in the 6,500 or the 6,600, this will be seen only when it comes into the 6,500, 6,000 or the 6,600 range. Okay, depending on the momentum, okay, and the fall, okay, percentage fall, the conditions, because now, okay, the market is extremely heavy in a manner that it can give very heavy fall, okay, and can enter into the correction easily. That is why when it loses and comes down to the 6,600 or 6,500, then there are two very heavy zones, very heavy support zones. Repeatedly, historically, they have supported the market and then a recovery, okay, 4 to 5% recovery. So we'll have to see, okay, the momentum and then what is happening at or around those zones, okay, and that will then confirm the bullishness and the bearishness. Okay, now the problem is, so for now, the thing is that the 7,000 in the S&P 500, 50,000 in the Dow Jones is not confirmed, cannot be confirmed. It may or may not happen. Earlier there were good chances, but not now. Now we'll have to wait until Wednesday. Okay, so just be available on Wednesday. Okay, I will open the post and the Fed chairman. I will give you the live updates. Okay, I will interpret his, like, whatever he's saying. I will tell you also the numbers and the zones. Based on that, you can modify your trades. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.